Hey, happy new year, investors, and welcome to the first trading day of 2026. I am joined by Daryl. How you doing, Daryl?
Doing wonderful, Victor. Good to be here. Hello, everyone.
It is great to be here and start off the year. Take a look at the market. The market is getting off on a positive foot. It looks like the futures are going to open higher, or the market's going to open higher. And the only big story that I've heard out there is that China, here's a story here, like um, companies in China are doing quite well. Their manufacturing industries are growing. Their technology industries are growing. So all those things are positive. And maybe the US stocks are catching a bid because they're going to consume more of our technology, more of our semiconductors and so forth. But the Asia market is up. The Hong Kong Singapore index is 2.76% higher to get the year started. I don't know. These guys, were they open yesterday? Because this is Asia. They have like a different calendar, right? Let me
Yeah, I
take a
don't know
peek.
if they were open yesterday. That's a good
Let's
question.
see here. I don't think they were. Yeah, they were not. I guess they followed the US and European kind of calendar where first of the year it was closed. So should be a positive day. That's good because on Wednesday, the last day of 2025, we didn't have a positive day. We had a lot of red. It was a pretty good sell off, and we'll see if we can get off on the right foot. Looks like Shadow Guy's on. Good morning, Shadow Guy. So the market where you're at still closed. Uh-huh. And are you referring to the US market or the European market? All right, great. So what we could do on this live stream is we have a couple of stocks that were requested, and then I wanted to look at some Chinese stocks since they are rallying quite a bit and kind of take a look at those. Looks like Herdo's on. Good morning, Herdo. Happy New Year. Good to see your name. Thanks for joining. If you guys would like us to look at stocks, please put them in the chat. Let's get the chat going. Our last stream, boy, the chat was really active. It was great. It looks like the Swiss market has a holiday on January 2nd. That's kind of smart because this week is kind of a weird one, right? We are active today. It's a Friday, and then tomorrow we're closed again. So we're open for one day, closed for two, and then next week will be a full calendar. So good to know.
We have
So
a
we're
law. We have a law here that applies to banking, but it also applies to the markets where you cannot be closed more than 3 days at a time. So that's why they were closed yesterday. They have to be open today because Saturday and Sunday are a holiday. That'd be 4 days.
that is interesting.
Yep.
Okay. I guess to give people access to their assets and to their bank accounts and so forth.
Yeah, I think that was all part of the laws that they instituted during the Depression when
Ah,
banks were closed and people were trying to get their money. So I think that law's been around that long.
well, I can't argue with it because what if you did need to sell some stocks to get access to your funds, right? Um, if we would have been closed from Wednesday to Monday, you're out 4 days, I guess.
Yeah.
So maybe that is kind of a pinch for a lot of people. It's not a bad idea. Okay, so let's get rolling. We're gonna get rolling with a couple of Chinese stocks and a Chinese ETF. Things are really rallying over in China as well as Singapore. And Alibaba had a terrific 2025. 2025. It began to really sell off for the last couple months. It looks like today it's going to be up almost 4%. That's going to be a good day for Alibaba. It's a big cap stock, $327 billion in market cap. Revenue is $142 billion. Net income, I don't need to cover that. Forward PE is 19. When you think about Alibaba, it's a pretty strategic business, right? They have a very strong e-commerce business. And I happen to believe that they used Amazon as kind of inspiration at a minimum. And then they set up Alibaba in Asia to do a lot of the same things that Amazon does in the US and around the world, but principally in the US. And now Alibaba's into cloud. They do cloud infrastructure. I believe it's either the biggest or one of the biggest hyperscalers in Asia, which I think is a real advantage for them because there's a lot of big businesses in Asia. So the proximity of having Alibaba be your hyperscaler, the price competitiveness is there. So it's a very good business. And then they have a payment system, Alipay. So it's a very strong business. Now it's part of China, and China is a communist country, but it does, and I'm going to high level cover the geopolitical situation. Is they're a communist country, a socialist country, but they realize, hey, we can really ruin a good thing, which is if you allow businesses to grow and prosper, they employ people and all that good stuff. So it's not as free as maybe other countries like the US, but they still have a capitalist kind of, section of their whole country. And Alibaba plays in that particular space. The forecast for Alibaba. So we are in 2026 now. They have a fiscal year that ends March 31st. So we are operating in this fiscal year. So we have about a quarter left. They're supposed to grow at 6%, and then their growth is going to accelerate. So that's looking good. So this looks good. Their PE ratio is really going to drop. I don't think it's going to drop because I think their stock price is going to rise. And today is kind of a step in that direction, which is stock prices going up. So it'll keep its PE ratio a little higher. When you compare Alibaba's PE to, let's say, Amazon's in the low 30s. These guys are currently in the low 20s. That's about right. It could go up a little bit, but that's what you get in Chinese stocks. You get somewhat of a discount when you invest in China. Overall, it's a fantastic business, and we'll see how it does today. I have Alibaba valued. I've covered Alibaba for some time. I am an investor in Alibaba. It's a big position for me. I'm glad I own it. Overall, I think there's still a really good discount on it. It's just a big, valuable business that's growing and cash flow. And I mean, all the pieces are there. It's got great bones, great fundamentals. And it's in Asia, which is an area of a lot of commerce. It's a place that I do want to have some of my eggs, some of my diversification invested in Asia because it's an important part of the overall global economy. So Alibaba having a good day so far. Hopefully they stick the landing and are up more than 3% today. And I think Alibaba was one of the picks on the contest we have. So that investor is probably going to be happy, like, oh, right, I'm off. I'm in first place day one. Anyway, let me kick it over to Daryl to check out the technicals on Alibaba.
So we'll start off with a 10-year view. I went back as far as 20 years, and this 10-year view, I can seem to get one of the best quiescent points on the stock where it tested it here, there, and has been trading for part of 2025 right at that level. So we'll use this one. It's the best one that I can find over the long term. And then we'll step down into just 1 year and see what's going on. Oh, the one thing I should point out is this big base here. Usually when you have a very long base like that, kind of sets you up for a pretty nice run.
Good.
So I'll point that out. And there's a saying that someone came up with, that the longer the base, the higher into outer space. So that'll be something to watch. Then we'll step down to 1 year. The 50-day peaked out on about the 24th of November. It is declining. The 21-day looks like it peaked out on the 30th of October, and it's been declining. And as I look, it's been a point of resistance as it has traded the last couple of months. The 200-day is still increasing, but the rate of change is slowing down. The RSI is in bearish territory at the moment. We'll see what happens when they open. The PPO is in negative territory. The accumulation has peaked up after bottoming out in July and August, and then again the end of November. So it is increasing a little bit. I do see that the money flow is positive at the moment. So this one's been on a short-term decline. Looks like they're going to be up about nearly 4% this morning. So this one may be one that we want to look at the end of close to the end of the show again, just to get a look at the chart and see what's going on.
Yeah, you got it. And it looks like Elder T picked Alibaba's his stock that he thinks is going to do the best in 2026, and not a bad first day. It's like, hey, it's like a Major League Baseball season, right? You win the first game. Well, you still have another 161 games to go, but it's always good to win the first game. All right, so we are already getting a couple of requests, so I'm going to cover this ETF quickly, and then we're going to jump into a couple of stocks that have already been requested by Paul and Pink Vodka High. And great to have you. That's one of the new members. So good to have you. Thanks for requesting Grab. Okay, so I've been buying into this ETF. I've owned it, let's call it for a year. And I started to buy into it again. And the way I'm investing in China, right? China's more difficult because I'm over here in the US. Do I know that, like, for example, Xiaomi's come up on our live streams and conversations quite a bit. Really impressive company, awesome company. And I know JD came up earlier this week. BYD is really doing well with selling EVs around the world. So there's just a lot of good companies. And I don't want to end up having to track 6, 7, 8 companies in China. So I'm buying this ETF. I own Alibaba, but I also own this ETF. And I think it's a way that I'm going to invest further into Asia, China. And that's going to be my play early in 2026. Looks like we had a nice little pullback to end the year, but we're going to have a nice opening day. So good to see that this one is trading higher. And I don't know, can you chart ETFs, or should we just move on to the next stock?
I'd like to show this one actually,
Perfect.
because it
Let's take
almost
a look at the charts.
looks like a carbon copy of BABA.
Good.
So yeah, it peaked out about the same time Alibaba did. It's forming the same base. And then when we go to the 1 year view, you can almost see the same kind of decline that it's been in, trading right around that 21-day at the moment. 200-day is increasing. It doesn't look like the rate of change is slowing down quite as much as it was with Alibaba. The RSI is in negative territory, as is the PPO, but the accumulation sure looks a lot better. It's at about a 52-week high. So money flow has been positive on this one for quite some time, despite the declining prices. So uh, if the economy and what have you changes in China and we start seeing those prices move up, this one could be a good play. We'll have to keep an eye on this one through the year.
Thanks, Daryl. So, real quick on Google. Yeah, Paul, thanks for bringing this one up. Now, Google did do really well. I think one of the predictions that I expect is going to happen is that Google, in my opinion, will be the most valuable company in the stock market. But I, I think it was maybe I did say that by the end of 2025, but for sure, I'm thinking um, over the next year to 2 years, it's really going to challenge these two guys. It's knocking on their door. I mean, you see the momentum that it had last year. I keep that sentiment on Alphabet that it is a real strong business. It's set up really well. Now it's bid up in 2025, but just Google, every time I look at it, it's just as strong. It's like, man, it's just the structure of it, the fundamentals, the momentum. And I think it's going to be the most valuable stock on the market. And then Amazon is going to be number two. And maybe these two battle it out. These two end up tangling at the top. I think Nvidia is phenomenal, but it's kind of a one-trick pony. It's a semiconductor company, an awesome one, but it is a single trick pony. And Apple's kind of a single trick pony to me as well. They have their iPhone and the app store that's attached to it. They can't grow. It's not exciting. It's amazing they're a $4 trillion market cap company. And then Microsoft's a little too old school, I think, to compete with Google and Amazon. So we'll see how things sort themselves out at the top of the food chain. All right, so let's get into some stocks that were requested. We're going to start off with Paul's STRL. That's Sterling Infrastructure. Okay, let's get into the data center. Let's get all over the data center here. Sterling Infrastructure engages in the provision of e-infrastructure and transportation and building solutions in the United States. It operates through three segments: e-infrastructure solutions, transportation solutions, building solutions. So these guys are a construction company? Yeah, engineering construction. So they're probably booming. I imagine they're booming with all kinds of contracts of all these companies building out data centers. So they're probably going to be killing it. All right. And yeah, you're in the right place. Now they have transportation solutions is probably not booming, but this is probably what's booming for the company is the e-infrastructure. So the planning, the electrical. Okay. So looking at the stock, let's look at the 1 year up 79.7. That's expected. Over the 5 year. Now, the construction companies have not been my favorite investments. Construction companies tend to be real good for a couple years and then they fade and their revenues go away. And these guys are benefiting from such a big build out of data centers. But once that slows down or competition comes, right? Because what keeps other construction companies from saying, oh, we could do that too. We can build, data centers, and we know electrical, we know cooling, we know all those things. And they go and compete against Sterling infrastructure. So there's no big barrier of entry into engineering construction. So they'll be seeing competition, and maybe the whole industry slows down. A PE ratio of 27, and I guess we're in 20. This is as of 2025. So this is for 2026. For an engineering construction company, I would not want to pay a 27 PE. That's too high. I'm willing to pay 18, but 27, way too high. So I would be careful with that PE ratio. So we have price targets of 32% above its current stock price. And it's got good revenue growth, but not incredible. It's just okay. And let's take a look at the quarterly. So it's picking up some momentum, but even as recent as Q1 in 2025, you see a contraction there. So it's been bid up, but it's not it's not experiencing really rapid growth. The growth has been okay. All right, so their net income has expanded. They're making more money. Okay, free cash flow is expanding. That looks good. And you see these gross margins. This is engineering construction, right? They can't have these big margins. They have to be competitive, or the customer will select another construction company. They usually have multiple bids on a construction project, and they have to come in competitive on price. So right now they are achieving a higher gross margin, but that'll never be like anywhere near like biotech or technology or other high margin businesses like communication services. And you see that historically, it's a very low profit business. And they will probably benefit for a while. I don't know if it's a year, 2 years, 3 years, but eventually they will come back down to what they have historically achieved. So this one here for me, I could tell you this one would be a pass for me. I think buying into a construction company when they're having a very good period of time, maybe never see this again. Like, whoa, data centers got built out. Competition is going to enter the market. Will they ever see this kind of growth again? I don't know. Maybe, but it's going to be hard because they're going to see more competition. So this one here is just a little too expensive for me. I think there's going to be some risk ahead. So that's my comments on Sterling infrastructure. And let me kick it over to you after I turn off this comment there. And you are on the stage, sir.
Okay, so we're looking at 20 years worth of data here. And you can see what they've done from 2006, basically all the way to 2022. Pretty much the same spot. And then we see the acceleration in pricing due to the AI. I think this is about where OpenAI put the first large language model into play. So that's where we sit over a 20-year time frame. And then when I step down to look at just the past 5 years, we can see that they traded flat up until October. That's when the OpenAI large language model was released, and the talk about data center requirements, and that's really when they took off. They have been trading in somewhat of a channel since that time, gone above the top of the channel several times. Back during the tariff announcements and the tech sell-off, it looks like they faced a sell-off, excuse me, as well. but they did recover and get back within the channel. Got to the top, which was pricing around $599, and they're currently trading at the bottom of the trend channel. And just to keep in mind, before the AI Center build out, where they had been for many, many years, was around $25. So I don't know whether we'll revisit those prices anytime soon, but you can almost bet that's where they'll be eventually. So let's step in to just 1 year. The 200-day is still increasing. The 50-day is on a decline and has been since the end of November. The 21-day is also declining, and it's been trading under the 21-day, it looks like, since about the 15th of December. And they are at the bottom of the channel, so that makes it lower risk if you still want to continue to play this particular company, because you do have a lot of room to the upside. They are trading below that trend channel at the moment. So to me, that's a little bit risky, especially given the 200-day is pretty close to this, but it is lower risk than buying it over here because you're at the top of the trend channel. The RSI is in bearish territory at 42. The PPO is also in bearish territory. It's been a little bit of distribution over the last couple months. The money flow is currently negative. So not terribly high risk at the moment. I think it's in a good position if you want to try to make a play in this company. It is at the bottom of the trend channel. Just manage those stop losses.
Perfect. Thank you, sir. So we're going to move over to Carrier Global. This is a request from Mike. Carrier Global Corporation. Carrier Global Corporation provides intelligent climate and energy solutions in the US, Europe, the Asia Pacific, and internationally. It operates two segments: heating, ventilation, air conditioning. Okay. And if these guys are working on the data center, they're probably, well, actually, this is Carrier. These guys do air conditioning. I know who they are. These guys are a big Indiana company, right? Yeah, so they do home cooling. I'm sure they do commercial as well. Okay. And so these guys are an industrial stock, building products and equipment. For the 1 year, this is down 22.56%. They paid dividend of 1.82. The 5 year, they were doing quite well. And now we've come down. Now, we're approaching a low interest rate environment. And low interest rates tend to have homeowners refinance and put more money into their homes. Maybe they do redo their air conditioning a little more often. I know I had to replace my air conditioner this past summer. We had a pretty hot day, and the unit we had gave out, but it was older than 20 years. It was like 20, that point, it was probably 20, 22 years old. So we got enough use out of it, and we've got a brand new one. I don't think we went with a Carrier unit. But I think with lower interest rates, that should help Carrier. Any kind of construction, home improvement is probably going to do better in 2026 due to lower interest rates. This is a $44.5 billion market cap company. Forward P of 19, and analysts think there's a big discount. So looking at their forecast, 12 analysts are putting in their price targets. So they're expected to see some growth in 2026 and some more growth in 27 and then 28. Their P ratio is really going to drop because their profitability is expanding. That looks really good. I think there's going to be a lot of good news around Carrier, around their earnings, and not a bad idea. This is low PE stock in industrials. I like what I'm seeing from a high level. Let's take a look at their balance sheet just to make sure they don't have a bunch of debt. So they have net debt of about 11 billion. Debt to EBITDA is right there at 3. So it's an okay balance sheet. It passes, but not a good balance sheet. They have lower interest rates coming, so that's going to help them with their debt, but they do have debt, which will decrement the value of the business. So why don't I kick it over to Daryl, and I'll whip up a quick valuation on this one because I'm curious to see where it's going to value.
So this brand has been around for a very long time, but they were spun out of United Technologies, I think, back in 2020. So they've been a publicly traded company since then. So I'm looking where to place a longer term auto support resistance line. And this is about the best one I could find, connecting as many points as I can to maximize that. Looks like they're trading slightly below that at the moment. So I'm going to move in here a bit. We can see that their recent price run basically, started right around the same time. The data centers and people believing that air conditioning, keeping those things cool was going to be important. So we'll step in and just look at 1 year, see where they're currently at. So the 200-day is declining. Looks like it maxed out somewhere in June. It's been declining since. The 50-day is also declining. The 21-day is also still declining. The markets are open, so we can see that they're trading up from yesterday's close, but somewhat in the bottom half of the previous day's candle. This has been pretty light trading over the last 2 weeks. We probably won't get back to full liquidity until Monday. The RSI is below 50, so it's in bearish territory. The PPO is still in bearish territory. It looks like we had a bullish crossover on the 28th of November. They've been in a steady distribution. Does look like it's flattened out since about the end of November. The money flow has been negative since the 29th of July. We did get bullish one day. Right now we're kind of in a neutral range. Let me step out a little bit. So this low right here was the lowest they had been in a couple of years. Let me go out a little bit more. Yeah, so they hadn't been to these lows since 2023. So that may be a really good support level. We could put a line there just to remind us of that. And I'm going to make that a green color. That's what I typically use for support. So I'm just going to draw a line there, make it horizontal and dotted. So that'll be a good support level to watch. And then if we're looking for resistance levels, They had a big gap down here. I see a few smaller gaps, but I would put a resistance level probably right around that candle there. So let me put that one on there, probably right around. They sold off, they come up and peaked and really started to sell off. So I'm going to put it about right there. So I'm seeing resistance at around 61 or so. And then this one changed colors on me. So let me get that set back to the proper color. There we go. We'll save that and we can watch this one. I'll save it as one we have in the list that we can look at in the future. So it hasn't really made a reversal yet. I would like to see that 50-day stop declining. This has been pretty much trading sideways for the past month. So no telling how long it could do that. So I'd really like to see it break out above the 50-day and maintain some pricing above that 50-day for at least a week or so. That's my
Thanks, Daryl.
thoughts.
Perfect. And you know, Carrier had a good PE ratio and so forth, but yeah, I can get to their stock price at the PE ratio. But when we look at cash and I decrement that debt, I fall way short. And I actually think the stock's price 33% too high just because the cash they produce, and I have it growing at that 7% clip that they will probably be growing at. It's just not, there's not enough there for me. And I think it would be a pass for me. So we'll see how they do. But looks like the stock's been selling off, and there's probably good reason for it. All right, so we're going to move over to Grab, and let's see. We've got CARR in the books. We got STRL in the books. We covered BABA. We covered FLCH. And on the list, we got SFM, Sprouts. We got Grab, and then MTG. Shadow Guy wants to look at MTG. And I think I had a couple of new requests. Magical Self. My position size on that ETF is about 1% of my portfolio. And I wouldn't mind moving it to 2% over the next couple of months. I think China's going to do really well. I already have a big position in Alibaba that represents more of a 3.5% position of my portfolio. And then I have about a 1% position in Futu. So overall, I'm doing the math right, 5.5 to 6.5% of my portfolio tied to China. So hopefully that helps, Magical Self. Thanks for the question. Thanks for the request. And then Pink Vodka, doubling down. You want BYD DF. All right, it's on the list. Let's keep moving on Grab. Grab is, in a lot of ways, kind of an Uber and a DoorDash over in Cambodia, Indonesia, Malaysia, Myanmar, Philippines, Singapore, Thailand, and Vietnam. So it does deliveries, mobility, financial services. I think they have a payment app and others. So this is, I value this company. We're going to refresh the valuation. But what's interesting is our friends over at Uber own a portion of the company. They own 13 to 14% of the company. And they made a deal in 2018 where they were like, well, instead of competing with you, we're going to go ahead and give you our market share, but you got to give us a part of your company, which they did. It's a $20 billion market cap company. The 1 year, it's only gone up 6.5%, forward P of 61. The price target, analysts think it's discounted. Let's take a look at, first I want to look at historic growth, because you look at their growth and they're relatively small compared to like an Uber. And their growth has been good, but it hasn't been like great. Uber's huge compared to these guys. And Uber is growing about this rate. So it'd be better to see them grow at these big percentages, right? Because then it's exciting. And I think that's why the stock's not performing all that great. The stock price has kind of been stuck. Is they got to put up some really fantastic numbers if you want to get the market's attention. It looks like in 26 they're going to put up a good number, and then 18, then 29. That'll be okay, but I don't know that it's going to cause a big rally. There's just a lot of risk, and my perspective is I'm a US investor. If I'm going to invest outside the US, I'm taking an added risk. And then if I'm going to go to grab, okay, what do I get? I get a good growing business, okay, with a high PE. Well, or they just invest in Uber. I'm pretty solid on Uber. So that's what goes through my head. Now, if this number had like a 50% growth, then I'd be like, whoa, I got to pay attention. I don't see 50% growth companies that are small all that often. But since they are kind of small, I got to be careful with this one. Like Uber, let's take a look at their margins and so forth, just to reacquaint myself with it. They're generating some cash flow, but it hasn't been consistent. It's been kind of a new thing to have free cash flow. And the gross margins, like Uber, it's not a big gross margin because they have to pay the person making the delivery or providing the ride. No problem, because it's a low capital intensive business. So they're going to have kind of a lower gross margins and profit margins for a reason. So I'm going to update my valuation of Grab. And in the meantime, maybe can you take a look at Grab technicals?
Yep. So we've looked at this one before. I'm going to update this downtrend line just to pull it out a little bit more. Set it about right there. I'm connecting this point and this point together. We also have some auto support resistance lines that we had drawn before. It had faced resistance here. It did break out above it, but now it's trading back below that line at the moment. I'm going to step into just 3 months or so because we have a lot of congestion down here. So we have a 50-day that's moving down. We have a 21-day that is moving down. It is trading below the 21-day. Today, it's been trading below that 21-day since the 4th of November. I'm going to step back out for just a moment because we did have this uptrend line, which was connected to a low we saw on November the 7th. It did rise back above that, came and tested the downtrend line, and then broke support here at this uptrend, and it has not regained any pricing above that trend line. So that's kind of a negative to me. The RSI is sitting at around 45, which is in bearish territory. The PPO is in bearish territory. We actually had a sell signal on the PPO back on the 29th of September, and we really have not gained another buy signal since. It is being in distribution with negative money flow since the 19th of November. It also has another support line down around 383. And based on what I'm seeing here, it may be sometime in the middle of the year, but it could actually test that line again.
Thanks, Daryl. So let me finish up my evaluation here. Okay. So I had to double check some numbers because they actually changed quite a bit since the last time I looked at it. I looked at it at Grab in September, and their free cash flow really dropped. So I had to do a double check, like, whoa, what happened? And it did drop quite a bit. So it's really underwater. It's priced too high. That free cash flow drop is a problem. They have a low earnings per share, and I can't give them above a 25 because I have a lot of options to invest in with companies growing at 20, 25% that are much larger. So why take a huge chance on this one? So this one here would be a total pass. It'd be a sell. If I wanted to take a higher risk, I'd rather go Lyft because it's highly discounted. Now, Lyft has lost the war against Uber, but it's a pretty good business. It makes money. It has a good balance sheet. There's a lot of things to like about Lyft. And of course, Uber's nicely discounted. It has momentum. It's I think it's going to do great going forward. So having said that, Grab would be a total pass for me. It's just too much risk, not enough there for me. I'll move on. Thanks for asking. Good to have you on the stream. Looks like Shadow Guy is considering a buy into Zurich Insurance. We looked at that one. I'll put it on the list, Shadow Guy. And I think I still have it in the section that I have for insurance, where I could compare that one against some US companies that do insurance. All right, so we covered Grab. Let's get into MTG.
Maybe we want to go back and do a quick market overview because it looks like it's gotten a bit ugly.
What? Man. Was it a head fake?
I don't know.
Well, is Google behind here? The Dow is down a bit.
Where's your market carpet?
Tell me again.
Can you go to the market carpet?
Market carpet?
Yeah, whatever. That red and green carpet that you put up all the time.
Oh, the heat map.
Yeah.
All right. Well, Nvidia is up 3%. Yeah. And now I could understand this, which is if China is doing great, and some of the comments I'm hearing out of Washington is maybe they do let Nvidia sell more chips to China. So China's doing great. They're growing fast. Their technology complex is expanding. Nvidia is going to be allowed to sell more chips, and so is everybody else. So I can understand this. Apple's higher. Google's, wow, look at that.
Yeah.
And this is part of it is the inferencing phase of AI. I think it's been, I guess, concluded, if not strongly theorized, that Google is going to be a big player in inference. So up 2.39. So I know Paul was calling me out that, hey, I was too bullish on Google, but I'm going to stand by Google. Amazon's higher. So the big hyperscaler, well, two of the big hyperscalers are up. Microsoft is falling behind. And so that's what's moving the market is these big names. Does that sound familiar? Hasn't this been the story for 3 consecutive years? Is it going to be 4? Maybe. And industrials, looks like GE is going to do well today. GEV. AppLovin's under pressure. I will gladly buy some shares. Healthcare under pressure. Biotech's a little green. Walmart picking up a bid. Costco's under a little pressure. Energy had a good week, but I think it's given up some of its gains. All right. So the big stocks are making it happen today, as well as semiconductor. The semiconductor equipment and materials are up. Micron is up big. AMD. And I think there was there was some new Chinese semiconductor plant opened or something. I did catch a story. It was yesterday was a little offline, just doing stuff with my family, and but I thought I saw a story where there was some big foundry started in China that's going to do memory. Okay, so that's what's going on the heat map. It looks like the Dow is underwater, but the NASDAQ, thanks to Nvidia, all the other usual suspects is trading higher. Okay. All right, so let's move on to MTG. And MTG, this is MGIC Investment Corporation, and its subs provides private mortgage insurance, mortgage credit risk, and auxiliary services. So I know in the US, if somebody doesn't put, like, they buy a home, but they put less than 20% down, I think it's a requirement. You have to buy mortgage insurance. And if you have 20% equity or higher, you could on the loan to value ratio, when you get the loan, you don't have to have mortgage insurance. A lot of people need mortgage insurance because home prices are so darn high that they can't put up like the big giant down payment to buy a home. So this is kind of a necessity. Over the 1 year, up 22%. Over the 5 year, wow, it's good looking stock here. I like the consistency. The 1 year looks good, pays a dividend. Hey, not a bad idea. It's in the insurance sector where it's specialty insurance. Got it. Looks good. I think let's see, are we seeing more home sales? I can't say that we are. I think some markets are actually slower. But overall, I think there's still going to be some pretty good refinancing, and probably some transactions are going to go MTG's way. Very low PE. And let's take a look at their historic growth. Not a big grower. Now, insurance companies know how to make money. They know how to wring out some good profits out of their businesses. And this one here, historically, has been getting that cash flow into the balance sheet. Very good. They have very big margins. Very nice margins. Those are fantastic. So that looks good. I wonder if they have mortgage insurance. So would they need to carry a lot of debt? Well, they don't. They don't carry much debt. So that looks good. So this looks like a good company. Where are they headquartered? So these guys are headquartered in Milwaukee, Wisconsin. So it's not a growing company, but they are making money. It's a small cap, 6.5 billion. And kind of back of the napkin, their PE ratio is really low. If I look at their free cash flow rate, 803 million. They don't have much debt. Yeah, I mean, I could say these guys are worth $8 to $12 billion. So there's a nice discount out there. This isn't going to be a super exciting stock, but man, this looks so darn consistent. Looks pretty solid to me. Let me kick it over to Daryl, see what he thinks.
Yeah, kind of seeing the same thing that you did. So as we start getting into the higher priced homes, higher interest rates, that we did see the takeoff in this one. Looks like they're dropping the last 2 days, but remember, we do have pretty light volume. This one has been pretty much trading at its average volume, which is not very many, 1.6 million shares a day. So pretty low volume in the big scheme of things. Trading below a 20-day that is flattened out. The 50-day is increasing. The 200-day is decreasing. They came down and touched the 200-day moving average in July. They've traded below the 50-day quite often. If I were going to enter this one, I would wait for at least another 50-day test. Maybe enter a smaller position and even kind of wait for a 200-day test. The RSI is at 49, so it is moving into bearish territory after getting nearly overbought on the 18th of December. We do have a sell signal on the PPO, but it is in bullish territory. Money flow was bullish. Looks like it's still bullish, but barely. If it moves down into the neutral territory, that just gives more confidence in waiting for a 50-day or even a 200-day if you want to be more conservative.
Yeah, that stock has done really well over the last 5 years. Good to see some stocks out there that are nice and smooth and real predictable. So let me catch up on chat, and then we're going to get into Sprouts Farmers Market. And then Paul, looks like Micron's been doing great. I have my concerns around Micron, but those are just me, and I don't like their margins. And I think they are in a commodity microprocessor business, or they do memory, and they're not the biggest, by the way. Samsung's bigger, and then Hynix is bigger. That market can get competitive, and they can go from great to bad real fast. We'll see what happens. And then Daryl, anything Meta trade wise? I'll put Meta.
I bought a couple shares on Wednesday, and I have 2 losing long calls at the moment. So today I thought I was going to be out of the woods on Meta, and we went from being up $3 to down $3, but it is recovering at the moment. So I'll keep watching those calls and see what to do with those.
Thank you, sir. Looks like Ricardo made it to the stream and wants to look at SII and then Weeble, symbol bull. We'll take a look at both. Take a look at them. They are on the list. And Mike, I put Adobe on the list. We'll take a look at Adobe in a bit. All right. So Sprouts Farmers Market is a grocery store. They have been growing nicely for a while. This thing was going up nicely. Look at that. I was just eating my heart out because I own Kroger, and this one just took off. Now, I'm careful around grocery because they don't make a lot of money, right? You don't make a lot of money when you're selling food. And then these guys just, kind of fell off. They've haven't recovered since mid 2025. Will the future look even better? Let's take a look. So $7.76 billion market cap, revenues of 8.65. And just the competitive picture for Sprouts is pretty tough. Sprouts reminds me of Trader Joe's. We have a lot of Trader Joe's in California, and I think they're nationwide. And they also compete against Whole Foods, Amazon. They compete against Kroger, Albertsons. So they have plenty of competition. But the way that they lay out their stores, smaller footprint like a Trader Joe's, and they have things people like. People can go there, grab something. It's almost like you grab something that's either nearly ready to eat, or you take it home and you can quickly cook it, or it's like healthy snack food. Their forward P is 14.4. Analysts are like, hey, this is highly discounted. I think the analysts are probably looking at their rear view mirror too much, going, well, I should go back to $173 a share. Well, maybe, but maybe you look forward and see what the heck they're going to do going forward and observe their competition. They are growing nicely. This is better growth than Kroger and Albertsons. They are expanding profits. That looks really good. So those two look good, and the P ratio looks good. It's dropping. Are they going to catch a nice, rally in 26? They don't pay a dividend yet. So let me kick it over to Daryl, see if he can make sense of that big sell-off, and I'm going to update my valuation on Sprouts.
I don't know what caused the sell-off, but they're trading at prices today that they were last in at the beginning of 2024, I think. The middle of 2024. So they have a downward sloping 250 and 21 day. They've been trading below the 21 days since the sell-off began on the 25th of July. That's also when the PPO went into bearish territory. It has not recovered that bullish configuration yet. They've also been in distribution since about the end of July. They do seem to be leveling out here at the moment. So if I were to enter here, I would just watch my stop loss levels pretty close in case my thesis was incorrect and they start another downtrend. But if you feel that it can recover, it wouldn't be a bad place to buy it because they are trading sideways, meaning the 21 day will probably start curving back around here before too much longer.
All right. So looking at the valuation, Sprouts has a nice discount of 34%. Now, that doesn't compel me to buy the stock because I'm already in Kroger. I still fear the competition. It's a crowded market. You have a lot of players in this market. And Sprouts, it doesn't help that you're going to compete in a way against Amazon. Well, they're pretty big and successful, in Walmart. Oh man. And then Kroger has been really good for a long time. So for me, I wouldn't buy into Sprouts, but I could see that maybe they catch the investors' attention again, and it comes back to where it's been in the past. Maybe it just goes up to $120 per share, but that would be a really nice reward for investors. It's not the investment for me because I'm already good with Kroger. I already own Amazon, so I guess I'm in the grocery business through Amazon as well. And I'm buying into Target, which is, the grocery business. Sprouts is pure play grocery, but like Target, they didn't have groceries 10 years ago. Now it's pretty good part of their business. And I would say that it's working because it's the consumer finds the convenience of, hey, I'm going to go and get some paper towels. Maybe you ran out of coffee and get some fruit, get some bananas and some eggs. And you have a couple other things, like maybe you go by and you get your son or daughter some clothing because they need something. So that kind of convenience, I think, goes pretty far. So I'm not going to invest in Sprouts. It wouldn't be one that I just feel confident enough about. I think there's better options for me. Thanks for asking, Mike. Looks like Sprouts has had too interesting of a last couple years. Somebody's talking about Alibaba in the chat. So let's revisit Alibaba real quick. All right. All right. I think I could just, after this stream, I might just call it a day. 5% higher. Beautiful. This is a good size position in my portfolio. It did really well last year. It's having a good day today. I think it's going to do fantastic going forward. So go Alibaba. Keep going. All right. Let's take a look at, I think from here, we're going to hit BYDDF. So this is BYD, and this is the company that does they do a couple of things that I'm familiar with. One is they do the EV cars, and they've been kicking butt, by the way, and they do batteries. And the way, at least we bought an EV, and the battery, so we bought a Honda, and the battery and brake system was made in China, and then the motor was made in Korea, and then it was assembled. So made it to the dealership. And a lot of these batteries that are going into EVs, you wouldn't know it because the same platform that our car is built on is what Chevy uses. Chevy, Honda, I can't name any other company, but Chevy's selling that platform quite a bit. Well, when they're selling a lot of BYD in their cars. That's the equipment manufacturer. So this is a $122 billion market cap company now, right? So USD, yep. And the revenue is almost 1-to-1, forward P of 19. This isn't a bad idea. Dividend of 4.4. Man, that looks good. Up 10%, but for a while, this thing was rocking. And it's been on a decline. Man, looking forward to seeing your comments on this, Daryl. Because look at that. Man, this stock's been a hard one to figure out. Like we just saw that beautiful chart in was it MTG? Just kind of, just gracefully up and to the right. Okay. Hey, it's nice to have a stock like that. It doesn't give you a heart attack. This one, it's had moments when it goes from $7.50 to $20. So you're like, wow, I mean, this is great. I'm so glad I own it. And then bam, from $20 to $12. Oh, this thing's going to give me an ulcer. So this one here is really hard to predict. Now, I don't like the car business just because of the profitability. And let's take a look at the profits here. So they went into negative cash after having a nice run of being in positive cash flow. But this is what I dislike about this industry is the gross margins are so low. It puts a low ceiling on the company. It's like, okay, we can never be a super profitable company. And then it just kind of, it makes money, but you have complex supply chains, complex manufacturing facilities. A lot of things can go wrong, and it could take a while for you to make a lot of money. And these guys are probably carrying some debt too. Let's take a look at the debt. Not too bad. They have more cash than debt. So good job, BYD. So I'll let this one here. I just don't like the industry, but it's not a bad idea if you're going to bet on EVs, growing around the world, which they are. And we may not see BYDs here in the US, but they are being sold all over the world. Let me kick it over to Daryl to check out the technicals on BYD.
So they are on decline since the 23rd of May. That was after a bearish negative divergence. So sometimes those do play out, and it pretty much hit this one right at the peak. The 200 days declining, 50 days declining. Yep. The 5-day has rolled over. The 21-day has also stopped declining, which looks like, there may have been a rise in the 21-day here for a short time, but the 21-day has really been predominantly on a decline since the end of July. The RSI is in bullish territory at the moment, and we do have a bullish crossover, but in bearish territory, and the money flow is still negative. So even though it's trading above the 50-day today. It is a Friday on light trading. I would really wait until I'm speaking about me now. I would wait until next week to see if it can maintain this little bit of an increase here, because there have been some head fakes along this decline. We had one here, we had one here, we had one here. So you get the picture. This could easily be a head fake and on its way higher. You have a 200-day that's declining, 50-day that's declining. So there's pressure to the downside.
Thanks, Daryl. So let's see here. So we're going to move over to Zurich Insurance Group. So as the name would tell us, they do insurance. They provide their services in Europe, Middle East, Africa, North America, Latin America, and Asia. So global company. Okay. 60,000 employees. Oof. 1 year looks real good. Pays a big dividend, 4.47. 80% rate of appreciation. And with that dividend, this thing got the job done. Very good looking stock. Smooth stocks here. Smooth operators. It's a substantial cap company, $108 billion. And forward P is 16, pretty sensible. And looking at their recent growth, looks like they were growing nicely in 23, 24. Trailing 12 months looks okay. And that's as far as I can go there. We don't get forecast data on international stocks, but I do have Zurich. I'm pretty sure I have Zurich in my valuations here. So let's take a look at here. Here it is. And the last time I looked at it, 29% discount. Let me kick it over to Daryl, and then I'm going to update this guy.
Well, you're not going to get much from me because this isn't tracked by stock charts. I can't see it.
Okay. Well, back to me. Let's update this together. And I'm looking at a screen that you guys can't see, but just so that I could update the numbers. So I'm going to update the discount rate. Interest rates are coming down. This is a good, solid business. Its growth rate at 6%. That is fine. Its free cash flow rate. Let's take a look at that. So it's free cash flow is, no, that's correct. Okay. Because these guys do semi-annual. Okay. So that number is still good. These numbers are still good. Yeah. So everything's still the same. So it's discounted by 36%. Now, Zurich, if you're in Switzerland or in Europe and you're very comfortable and familiar with this company, there you are. You got a pretty nice looking stock there. Now, I'm in Allstate, and when we look at insurance, I've got a pretty good string of insurance companies. And the one that I like the most is Allstate because of its PE ratio, and its price to book is getting a little expensive, but it's better than others. Like Progressive is a little expensive. Now Zurich, I thought I had Zurich in here. Nope, don't have it. So let's take a look at, so the P ratio for Zurich, it would land kind of middle of the pack. It's price to book. Let's take a look at that. And then return on equity. So book value per share, I wonder why it's been contracting. I wonder why that happened. So the book value went up a little bit from 23 to 24, but it used to be 255. Not sure why that happened. Did they divest a part of their business? And price to book of 4. That's pretty expensive. That's much more expensive than Allstate. It's up there with Progressive. It's actually more expensive than Progressive. Its P ratios for the forward P's, middle of the pack, but not near the front. So yeah, that's Zurich. It's had a good 5-year run, and I assume they know how to manage their business. These insurance companies are smart. It'll continue to probably perform well, but it's not going to be a high flyer. It did really well for the 1 year. So that is Zurich.
So the shadow guy did point me to a symbol for stock charts to get to Zurich, if you want to take a look at it real quick. So they had a different symbol than the one that you mentioned. So they do have it in here. So it's trading above an upward sloping 21-day, 50-day, and 200-day. It has tested the 200-day as recently as the 4th of November and the 20th of November. Traded pretty much sideways from August all the way until this breakout. I don't know what's driving this breakout at the moment, but I wouldn't feel comfortable with this one until it got back down to the 50 or the 200 to pick up shares. We do have very close to getting a bearish crossover or a sell signal on the PPO. We were overbought, and we are coming out of overbought, sitting just below 70. So I think you could probably wait on this one. I think it's had its run, and we'll probably come back down to test the 50 and the 200s before too much more time passes.
All right. Thank you, sir. All right. So let's move over to Adobe. What's going on in Adobe land? So it's really down. And is the market really selling off the software stocks? Looks that way. Looks like it's selling off the whole lot. Huh. Why is that? So Semiconductor is roaring, and Google's kind of faded a bit. But let's take a look at some of the stories that are out there. Yeah, for me, this is a buying opportunity. I'm going to buy Adobe today. So the valuation is really good on Adobe. It's priced really well. It's growing. it's a weird day to see the market sell off software, although it's been doing that for a couple of years, so it's not totally unusual. But boy, Semiconductor really picked itself up today. I wonder what A-Lab is doing today. It's probably up a lot. Yep, 6.3%. Good. Okay, so Adobe, it's discounted. I can pop the valuation real quick, and it's growing. It's I think it's going to be a good stock this year. Discounted by 53%. I'll buy some more shares today. All right. Meta. And I think you answered the question on Meta, right?
Yep.
There was a question around, is there a trade out there for Meta? It's under some pressure. I think it's going to do well this year. It's been, the price has been reduced. They course corrected on the CapEx. They've announced that, hey, we're not going to spend as much. And I'm willing to bet that the earnings in 2026 are going to be solid for Meta. This is going to be a good performing mega cap. So that's where I sit with Meta. Ricardo wanted to look at SII. That's Sprott. Never heard of this company. Have you ever heard of Sprott?
I've heard the name, but I have no idea what they do.
Well, they're making investors wealthy. Sprott is a publicly owned asset management holding company. Through its subsidiaries, the firm provides asset management, portfolio management, wealth management, fund management, administrative, and consulting services. Why are they going up so much? Okay. So I thought they were financials. Did they invest in these so Sprott is a global asset manager focused on precious metals, critical material investments. We got it. So they're in the right place to be. So precious metals, the metals markets have been doing great. Okay. So they're in uranium, gold, silver. What are your thoughts on the metals? I don't know if you follow them all that closely. Do you think they're going to keep going higher, or will they have they hit their peak?
I don't really have an opinion. I don't follow them. All I see is headlines. So it's not something I have an opinion on.
Yeah, I don't have a strong opinion either. I know that they've been going up, and obviously this stock's really flourished as a result. And it really follows the materials sector started to pick itself up, and this one's really picked itself up. Wow. So this is 2.5 billion market cap, PE of 29.97. That is high. And analysts think there's still a discount available on this stock. It has been growing its revenues 22% in the trailing 12 months. And the last quarter, it grew by 40%. Okay. They produce free cash flow, and their gross margin 42%, profit margin 23%. So it's having a very good year operationally, and the stock price is flourishing. So how long is this going to flourish for? We have one analyst covering it on the stock targets, but we have 6 analysts contributing to the forecast. And you see here, this would kind of scare me. It's been flourishing, but if it slows down, what will investors do? Will they sell out of the stock? So I'd probably be really concerned with this, that they've had a couple of good years, especially 2025 was awesome. Are they going to begin to fade because the stock price is too high? These here, if you understand the big picture on materials, you could probably do great, but sometimes you think you understand it and it just doesn't happen. That's happened to me before. Like I can't predict oil prices. I could observe it and say, oh, okay, great. Oil prices have gone up. Oil companies are worth more. But to sit back and say, oh, yeah, I think this is going to be the oil price at the end of the year, man, can't do it. And I don't know how people would do it for materials either. Today it's up, year to date. Oh, well, year to date doesn't really help us. For the 1 year, it looks really good. So, very interesting stock. All right, let me check in on the market. Looks like the S&P is even now. Whoa, what's going on? Did the market pump the brakes? Yeah, it's pumping the brakes here, and then we're seeing more green over here. Wow, look at all this red software. Software is being thrown out. We don't need software anymore. Man, that is a pretty vicious sell-off in software. Okay. And we still have a rally in semiconductor. Now the industrials are kind of joining the party. Seeing some green in utilities, energy. What a wild day. Did oil prices go up? No. Yeah, oil prices are not higher. But the energy companies are catching a bid. Okay. We'll see where things land today. Things are going all over the place. All right, it's just day one. No big deal. All right, so let's keep rolling here. Looks like we got our first super chat of the year. Looks like Maris Cruz. You'd like to look at Meldiff Group AB. Thanks for the super chat. Let's take a look and see if we can find that stock. So that's Meldiff Group AB. So this is it right here. So do you have a sense of which one I should go with here? STO. So this is where are these guys headquartered? So okay, I think I'm going to be good here. So this is NASDAQ Stockholm. Okay. All right, let's take a look. So this is going to be in the SEK currency. The Swedish krona, and that's 0.11 US dollars. Okay. So the market cap is, I guess, a little over 600 million. Is that right? Yeah, 600 million. Forward P of 20. These guys do. Mildef Group, together with its subsidiaries, develops, manufactures, and sells rugged IT solutions in Sweden, Norway, Finland, Denmark, United Kingdom, Germany, Switzerland, and the US, and Australia. The company offers rack mount IT equipment, rugged computers, KVM, switches, routers, power distribution. Okay. So they're in Aerospace and defense industrials. Interesting. So this is, yeah, the military would carry their computers. So that's why they're in industrials and aerospace and defense. Okay. Ah, got it. Okay. Okay. So got a handle of their business. The 1 year, this stock has not performed. The 5 year, it had a real big boom back when we were seeing a lot of aerospace companies get a lot of investment with the expectation that a lot of countries are going to have to spend more on aerospace and defense. Very logical conclusion there. But ever since hitting their peak, which was in the springtime of 25, it's come down. It's come down quite a bit. Over the 1 month, it's down, but it really went down a lot. From the peak of 280 to 120, that's what, 55, 60% depreciation. They have grown nicely in the trailing 12 months. The quarterly looks fantastic. Why is the market selling it off when it's growing that fast? Okay, and did they do quarterly? Yep. So they're burning cash, but if you're growing that fast, it's kind of okay because you're growing that fast. You have to put capital into your operations to be able to produce and deliver the product that you have sold because they're growing really fast. Gross margins are pretty good for a tech company. They are not profitable and they are burning cash as mentioned. And, you know, I'm going to look at their earnings per share from a couple previous years. So in 23, they had a decent earnings per share, but then they had a loss in 24. Trailing 12 months, they are carrying a loss. So here's their statement of cash flows. So they have operating cash flow in the last full year. So what's going on with their cash? How come their cash is non-existent? This is, I mean, the change in net operating assets, that makes sense because if you're going to grow at like 100%, you're going to have to expand your operation. Okay, that makes sense. So that's kind of excusable. They did have operating cash flow, then they had CapEx here. So this would probably be more of a good number to use is 2024's number before they started to grow really fast. So that's 130 there. All right. Are you able to chart this one?
I can do it in stock analysis, not on stock charts.
Well, take a peek at it. It gives me a few minutes to try to put together a valuation on it. Thank you.
Yeah, so we did have the 50-day cross below the 200-day. That's what they call a death cross. The 50-day kind of trended along with the 200-day, but then really dropped off here the last month or 2 or 3 weeks. So the 200-day is now declining, the 50 days declining, and this is a 20-day simple moving average. It is also declining, and it's trading below that, coming back to test the levels that we saw in November. And then to see these price levels again, you have to go all the way to December of last year. So they basically round tripped in 2025. We do have an RSI that is in bearish territory, so it's currently sitting at about 38. It did reach up to nearly bullish territory, but got rejected on momentum, and momentum is pretty stagnant at the moment. It's been trading sideways at least for the last week. We did have a sell signal in the MACD, and it's been in that configuration until we got to a bullish crossover, but we were in negative territory. We had this slight price increase, and then it's right back to the lows that we saw back at the end of November, so over a month ago. So this one doesn't have a whole lot of momentum behind it at the moment. My guess is that we probably have lower prices in our future with this one.
Even after that big sell-off, that's your expectation?
Yep.
Okay. So this one's tricky. So I'm going to try to get us to a good valuation generally there. So I'm dealing with the currency difference, and I'm going to have to kind of create some numbers on solid like estimates. And let me catch up to where I'm at here. So all right, free cash flow. Here's our first estimate. So it's great that they're growing this fast. Okay. That is really fantastic. You don't find businesses like this. And if they can sustain that, that's a pretty special business. Now, this is for the September 30th quarter. They're going to announce their next quarter soon. And the last full year before this big growth started, they were at $133.7 million of free cash flow on this currency. Okay. So I'm going to use that number and I'm going to grow that number. And the reason for it is the current year, you're having to spend so much cash just keeping up with a business that's growing at 100% for the quarter. So it's like, okay, well, you're going to have to spend cash. I get that. So that is going to be 130 million times 0.11. So they're growing fast. How sustainable is that growth going to be? I don't know. So I'm going to have a couple growth rates here. So the growth for the first 2 years, which is going to be year 1 and 2, I'm going to grow that by 60%. And then growth 3 to 4, 30% is about okay. We'll go 4% there. So here we're going to grow this by 60%. This already has this number in there, so I want to change that to this number. All right, so this is the forecast that I think they're going to hit. This is in US dollars. Okay, so put that note here. Okay, so that's the intrinsic value is 1 billion. The cash on the balance sheet is man, I'm not getting anywhere near that. Well, let me double check a couple of things here. So usually the shares outstanding are wrong on international stocks. So 47. Okay, so I'm going to back out these numbers. I should have stayed with that currency. So we're going to go with that guy. Because the market cap's actually in the foreign currency. So that's fine. Okay, so this is in this currency. Okay, so if we compare, if we use the last free cash flow year, which was kind of a natural year, it's 130 million SEK currency. And if I value it according to that and give it a fast growth rate, because they're growing really fast for the first 2 years, slow down the growth rate to 30%, and then give it a typical growth rate after year 4, I get to a 39% discount. Now let's take a look at earnings per share. And they lost money in 2024. Let's see if Gemini can help me out here. Okay, so it did help me out. So this is in that currency. So the average estimate is going to be 232. Now, if they're growing by that growth rate, they deserve a high growth rate. And here, profits should expand nicely. So this one's kind of a very difficult to estimate, but if I just put numbers into a valuation that are within reason, this thing prices out. It's been sold off quite drastically. Going, and let me look at Google here. It gives me a better. So over the 1 year, this thing's gone from here to here, 58% drop in 7-8 months. Why is there such a drop? I would study all their all the news that you see on the stock for the last year. What is causing everybody to leave the stock? And if everything checks out, I would then wait for this thing to start to rise and then maybe entertain. For me personally, this is what I would do. Then I would entertain investing in it. I wouldn't invest in this company because it's way out of my home country. It seems like a good business. They're growing really fast. You don't grow that fast if you don't have, if it means that the product's really good. Something about the product is driving a lot of demand. So there is opportunity, but you got homework on your hands because this thing's just done some really unusual things. So that's MilDef. We'll see what it does. Man, look at that chart. It really took off. And the growth that they're now experiencing, if the chart would have kept going higher, that would have been like what I would expect. But for it to pull back, there's probably some negative stories out there. All right. That one was a difficult one. All right. Thanks for tuning in. Maris Cruz. And looks like Ben 10 Nike is on the way back up. All right. Good to hear. All right. So we've got a couple more to go here. We're moving on to Webull. And this one here, I actually had kind of earmarked to come back and look at it. Now, when did these guys IPO? So they IPO'd back here in 22. Man, was this a short squeeze? What happened there? So $4 billion market cap company, $514 million in revenue, forward P of 47, price target 105% above his current stock price. Hasn't been doing much. Webull Corporation operates as a digital investment platform. Its platform enables retail investors to trade securities through its licensed broker-dealer in the US, Canada, UK, Australia, Hong Kong. Okay. All right. So $4 billion market cap. They have been trailing 12 months. The growth looks good. If we look at the quarterly, growth looks good. Looks real good. All right. And so they do have free cash flow. They're not making money yet. Okay. And we've got two analysts covering them, putting price targets way above their current stock price. 4 analysts are putting the forecast out there. These guys are going to continue to grow. So why is the market not liking these guys? And it's the same thing I've seen with other small brokerage stocks. The market really likes Robinhood. It likes Charles Schwab, but it kind of hates on eToro and Webull. It's just not buying up those stocks. That's what the market's been doing. So let's take a look here. So we looked at the forecast. The forecast is supposed to grow nicely. Can you show the charts on Webull, and then I'm going to update my valuation?
Yeah, this is somewhat of a strange looking chart. Probably because of this big spike. It's just collapsing all of these prices here. Probably do a little experiment and bring the chart back to this point. We probably see these candles much better, but it's probably not worth the time at the moment. So yeah, I'm with you. I don't know what drove it from $11 to nearly $80 in about 2 days, but it quickly sold back off and got back down to sideways trading range, and then finally broke down, and it's trading below a downward sloping 200, 50-day, and 21-day. It did get above the 21-day. I don't know, maybe for a week or a couple of days. It does have an RSI that is still in bearish territory, and the PPO is also in bearish territory. The momentum has come out of this one. The money flow is somewhat, no, it is definitely in bearish territory. I thought it was in a neutral range, but it's definitely in a bearish territory as well. This one on Wednesday did trade its normal daily volume. And for the week prior to that, it was below the average. The last time we'd been above the average was on Friday before everybody started going on holiday. So this one is still in a downtrend. I don't know how low it can go, but it is still in a downtrend at the moment.
All right. So my valuation on Bull is a little high, and I'm feeling a little unsure of it. I'm using 2024's free cash flow because they haven't updated the free cash flow numbers, so I don't have anything newer. But if I use that number, it looks good. It looks like, like Robinhood and other stocks that I value. The earnings per share, it looks okay. And actually I can move that to 25. So this one here it's a tough one because it's a small cap. And I can tell you from, I bought into eToro and then I sold it because it was just like selling off for no good reason. The market just didn't want to buy it. And it may be the case with Webull. So the numbers may look good, but the market has to get confident around the stock. I would wait for it to start to rally before I ever got serious about it. And I need to update the numbers because the numbers are too old. We're now close to a year because they haven't announced the full 2025 number, but I have to get refreshed numbers so I can refresh my valuation. So Webull looks like an interesting stock potentially, but we got to let the market start buying it before we get interested because you could sit on this stock for a while. These small caps, the ones that take off, man, they look so awesome because they go up a lot. But some of them just bump along the bottom, and it's a pretty frustrating experience. All right, so I'm going to move to EVR. That's one that Ben 10 wants to look at, but let me catch up on comments. You guys are lighting up the comments, and FYI, if I miss a comment, I apologize. As you guys could tell, Daryl and I are super busy, and sometimes I miss a comment. But Ben 10's looking at app. All software companies are selling off harshly. I'll take a look at that one. SK Hynix. So we can look at that. That's the one that I believe is a Chinese memory manufacturer. I don't think you can trade that on the New York Stock Exchange, but you can probably buy it over the counter. We'll take a look at it. So Owlet is looking great so far. Was that your pick for the stock picks? Let's take a quick peek. I know we looked at Owlet this week or last week. Oh no. Maybe you were being sarcastic. Wow. The 1 year looks awesome, but the 1 day, not awesome. Well, good luck. Hopefully it turns around. So Vici has hit bottom and can recover by summer. It could. I hear a lot of negative stories about Vegas, though. I just keep hearing negative stories that the traveler doesn't like Vegas, or fewer travelers are going to Vegas. So I see 8 analysts for Zurich on tip ranks, 8.4% downside. Well, it's been doing well. So, all right, cool. DraftKings is green, huh? Boy, enjoy it. Those guys have been kind of hit hard with the whole prediction markets. So let's take a look at DraftKings, see what is going on with that stock. Nobody picked DraftKings, I don't think, in the stock picking, but somebody did pick gambling. So Genmab is back up today. Man, that one's such a tricky one. GMAB. It did really well, and then it didn't do much. Maybe it's on its way back up. All right, let's get back into it. We're going to go to EVR. Evercore, together with its subs, operates as an independent investment banking firm in the Americas, Europe, Middle East. Okay. So financials, capital markets did well in 2025, has done great over the 5-year. What is their area of focus? Okay, I don't think I can get a sense of what they focus on from their website. So investment banking, equities, and investment management. Okay. So $13.7 billion in market cap. Forward P at 21.47. Analysts think it's fairly priced, maybe a little expensive. It has been, the stock's been going up for a while. So when we look at their income statement, they are growing their revenues. Looks good. So in 22, I can understand that their investments, and there was less investing going on. It was a bear market. Things started to crank up, and they have been cranking up. Now, 25 should have been a good year for them. Net income went up. That looks good. Free cash flow of $1 billion. Looks great. So this one here, it's about, do you think the stock market's going to go even higher now? Is there going to be a lot of deal making? I think there could be, because I think the last couple of years you haven't had as many IPOs. Companies are staying private for longer, and they take on, like Evercore has an opportunity to finance some of their growth. So I think that's positive. So that may help them. So that's one thing I'm thinking about for them. They're supposed to keep growing. That looks good. So this stock looks good. It could continue to grow and flourish. And it pays a small dividend. You want to look at the charts, Daryl?
Sure, they really took off about the same time as the AI trade started coming into vogue. They went on quite a run, had a big pullback in April of this year. It looks like they may have pulled back about they were down by half. But that would have been a really great time to buy. So they're currently, yesterday they were, I guess 2 days, no, yesterday they were coming down to test their 21. It looks like the intraday they got pretty close to that, but managed to stay above the 21-day. Today they're trading about where they closed 2 days ago, 2 trading days ago. The 50-day looks to have bottomed out here. So it come up and peaked. It has bottomed out, starting to move a little bit higher. We will have some resistance here around 362 or so, but if it can break out above that, that would be a really powerful signal, especially if it does that on good momentum. The 200-day is still increasing. They have tested that during the tariff. I'd have to go back and see before that. They may not have tested many times. Nope, they haven't. They don't test the 200-day very often. So yeah, so they're right at the 60 level on the RSI. They never did get into overbought territory on the last 2 momentum swings, whereas you can see they did back in September. They did manage to get above that. The PPO is in bullish territory, but we did have a bearish crossover, as you can see here, to the downside. So this does have some resistance not too far above where it's trading right now. That would be something to really watch and see if it can break out above that. If you want to buy it here, make sure you have a stop loss on it so you can get out if this starts turning downward. But yeah, you will be facing some resistance around 364 or so.
Thank you, Daryl. All right, so let me catch up on a couple of stocks, and then I'm going to hit the chat. So SK Hynix, looks like a stock traded in South Korea, and it's been flying up along with Micron, 289% and then 471%. Incredible. I mean, I don't trade on this in this market. Yeah, they do NAND storage. They compete directly against Micron, and then the other one is Samsung. Incredible. When will the party end? I don't know, but it will end. I just don't think the data center spend is going to stay at the rate that we're in. And then there should be kind of a digestion period. Like, hey, they bought all these semiconductors, they built out all this data center. Okay, now companies can use it for like 2, 3, 4 years. So there should be a drop, or if anything, just a flat period of growth for this industry. It'll eventually happen. I just don't know when. I don't know if they still have another year of going up, or if they have 2 years, or if they have less than a year. But we'll see. The market will certainly trade based on that expectation. And it did have kind of a pullback here, but now it's been flourishing higher. And today it's up 4% with all the news around China is doing better. Its tech space is looking brighter. So very interesting. So AppLovin, it's under pressure, but the rest of the space is under pressure. Wow, look at that. Incredible. This is a phenomenal stock, and it's a really good business. So I'll take advantage of that price. I'll buy some shares. DraftKings having a positive day. That's good. Wonder, the football season's been really good. So I wonder if they're growing off of that. Look at that growth. These guys continue to grow. But the last quarter, that's a problem there. When are they going to announce their earnings? February 12th. So we're about a month and 10 days from that date. They got to start putting up some growth, or the market's going to be like, yep, they're done, because prediction markets are replacing them. So we'll see where they go. If they announce good earnings, the stock can really fly up. GenMab up 2.4% over the 1 year. See, this thing really flourished and then it's stalled. What's it going to do next? I don't know. I hate not knowing. See here? So I got myself out of it. It was just not predictable enough. The stock that I decided to buy into was Regeneron. Would you mind taking a look at GenMab? I'd be curious to see what you think of the charts on GenMab.
I can pull it up here.
Thank you.
So we had a resistance point set around $38. They came up and tested that almost to the penny and was rejected. We had 3 days of gap downs, keeping in mind that, well, I can't keep that in mind because it was trading above volume. This is one that was actually trading volume on at normal averages on a 2 sell days, 3 sell days on a row. The first one didn't have as much volume, but the next 2 did. So there were people trying to get out of this one. So it is recovering a little bit today, but it is trading outside of an upward trend line. I also sold my shares on the 31st. And I think I explained yesterday that one of the reasons that I did that is because of this chart. Actually, two, but we'll just look at this one. Because seasonality wise, this one tends to drift down until about the end of March. So from a seasonal perspective, I think there's going to be downward pressure on this one, and it's trading below an upward trend line. If it breaks this downward trend line, then I'm thinking it's going back to about somewhere between $28 and $29. So it could be, let me see where healthcare is today. Yeah, they're in the green. So the healthcare in general is up, while we have discretionary, consumer, communication services, real estate, and technology in the red. So healthcare is getting a little bit of a bid today. I noticed that CRMD was also up today. Yep. They're up 4%. That's where I stand with GMAB. I'm gonna revisit this one somewhere towards the end of February. I'll get it back on my watch list and see where it goes from there.
All right, thank you, sir. All right, so I've got to get going. So we're gonna end. Although there's a lot of good comments, thank you. We're gonna look at a firm, and then I've got to go. So good to see everybody. Good to see you, Tony. And let's see here. I wanted to look at the market just real quick. Interesting. So it's a mixed market. Just semiconductors doing great, but other parts of the NASDAQ software is down a lot. Very interesting. Kind of a difficult to read day one of 2026.
You're not sharing.
Sorry. Thanks for letting me know. So the S&P's down, the NASDAQ's down. And as I was saying, it's a difficult day one, but in a way, it's kind of like, well, this is what's been working for the last 3 years. So I think it's going to work today. Microsoft's down a lot. Software space is down tremendously. Meta's down a lot. Amazon was up earlier, now down a lot. Wow. Industrials are up. United Healthcare's up. Yeah, I think every hour, if I look at the heat map, it's going to look different, with the exception of semiconductor will continue to be green. Okay, so I will let that play out a bit, but I am going to definitely be a buyer. Some of those stocks are selling off. I'm probably going to be like Mike and just buy. I have the capital. I kind of built up capital toward the end of 2025, and I'm ready to go with some cash. Affirm, these guys operate payment network in the US, Canada, internationally. Point of sale, this is the whole buy now, pay later, right? And okay. Now these guys, $24.6 billion market cap. These guys came out and were really popular, at least a high price stock, and then they settled down. It has been a productive stock for those that bought, at $10, $15 a share. Boy, it's up to $74 a share. So it's looking good. $24.6 billion market cap. Forward P is 22.78. The growth has been good. Yeah, growth is good. 33%. And it's interesting to know like how they monetize. They are pretty much taking kind of like a 3% margin, and they're carrying that purchase for like 6 weeks or 8 weeks. And they earn that 3% over that period of time. Well, if they can turn that money, 10 times a year, that's really good profit for them. Here's their profit margin and their free cash flow. So looks good. So overall free cash flow, 769 million. Forecast for them. And the consumer, there's a lot of noise out there, but from what I'm seeing, economic data shows that the consumer continues to buy. The consumer is not going away. We're in this year here, growing at 28%. Then they're going to grow at 25, and then 20. That looks excellent. If they can hit that forecast, they're going to be looking good. And their P ratio is going to come down to the 20s eventually. So this is a good growing company. That's a lot of analysts looking at them too. So this is a good idea. I like the idea. What's their I have a valuation for them. You want to look at the charts on a firm, and then I'll update my valuation.
Okay. So they are in a shorter term downtrend. They had broke above the high that we saw. Let me get out of annotation mode here. They've gotten out above the highs that we saw in February. They traded up and set a resistance point here at around 92. The 50-day has rolled over, and it looks like it's bottomed out and maybe starting to move higher. The 200-day is also moving higher, and we've had 2 tests of the 200-day moving average recently. We hadn't done that since before the 29th of May. So it looks, as far as resistance and support, you probably have equal distances. So 22%, got 15% to the downside. So it's sitting just above the midpoint here. So your risk to reward at this point is probably 50-50. So I don't know how you want to handle that. But the RSI is in bullish territory. PPO is in bullish territory, but it looks like it's working to get a bearish crossover. They have had distribution since the 22nd of August. Actually, quite a bit of money flow was negative, and now it's alternating between outflows and inflows. Currently, it's sitting in bullish territory. So there were a lot of initial sellers this morning, but it looks like buyers have stepped in and kept it from trading below the 21-day moving average.
Thanks, Daryl. And I was wrong. I don't have a valuation for a firm. It looks like it's correctly priced at around, and I actually think it's priced a little too expensive because it has $760 million of free cash flow. If I were to like go 30 to 40 times that rate minus debt, you're right on the number, but it could be a little risky if you have a bad earnings report, or these guys have like PayPal hasn't done anything. Some of these stocks, they kind of get in a rut and they don't get out of that rut. So this one here is not an obvious kind of like huge opportunity, but I think it's priced fairly. And if you're optimistic about the business, okay, price fairly, buy accordingly. Looks like Daryl gave us some good data on the charts. Good to see you, Tony. All right, guys. Well, I'm going to have to run, but looks like you guys really showed up today. Thanks so much. We had a lot of attendees today, and good to see all of you. Mike, good to see you. Shadow Guy, Tony, Michael, good to see you. Man, a lot of people. Ricardo, Maris Cruz, good to see you. Ben 10, you guys, happy new year. Magical Self. And Paul, good to see you. And Pink Vodka, good to see you. Probably missing some people. Sorry. NASCAR, thanks for joining. And I think that's everybody. And then our newest member, Pal_US, thanks for joining. Appreciate it. All right, everybody. Well, good luck to you today. It's kind of a weird day, but we'll see how things play out. This is day one. We got a lot of investing to go, and good day to take advantage of some of this selling off. I'm glad I created some cash in my portfolio so I can use it today. Daryl, great job today, sir. Thank you so much. We covered a lot of stocks.
Yep. Thank you, Victor.
And do you have anything going on today with your channel?
Not today specifically. Nope.
All right. So today I was going to create a video. I'm going to look at my watch list. I've been working on my watch list for a couple years, and what's really enhanced it is all this work we do on live streams. I mean, I've got like 350 stocks, and I wanted to highlight some of the best looking ones. And I was going to do a video where I can look at 10, 12 of those and put them into a video, and I'll release that when I get it done. So that's what I'm going to work on today. All the ones highlighted in green are potentially going to be on the video, but like PBR is a stock that I'm going to see if it belongs in that video. Kind of like the best of the watch list is going to make it to that video. So if you're an advanced member, look for that video to come out, and then in about 30 days, it'll come out to everyone. So that's what I'm going to work on today, and plan to live stream over the weekend. I'm not sure if it's going to be Saturday afternoon during the football games or Sunday, but it'll happen over the weekend. And then we'll live stream next week. I'll see what the schedule looks like, and we'll publish out the dates or the live stream days that we can go as soon as I can. So that's it, everybody. Have a terrific day. Thanks again, Daryl. We'll see you
All
guys.
right. Take care, everyone.